The XRP trading landscape, navigating a crucial crossroad with neutral RSI and a symmetrical triangle formation. Will the $3.30 breakout finally happen? Let's get straight to the heart of the matter. XRP is at a significant juncture where the next move could define its short to mid-term trajectory. But here's where it gets controversial. While some see a looming breakout as inevitable, others warn of potential downside risks. And this is the part most people miss. Understanding how whale activity and institutional flows interplay can reveal clues about what might be next. Recently, XRP has been caught in a roller coaster trading session, swinging between the support floor near $2.76 and the resistance ceiling around $2.86. These price movements have not happened in isolation. Broader geopolitical tensions, combined with ever-shifting monetary policies, particularly the uncertain stance on Federal Reserve interest rate changes, have stirred market volatility. Liquidity jitters are contributing to this already choppy environment. Yet in the midst of this turbulence, something intriguing is happening beneath the surface. Major holders, often referred to as whales, have collectively scooped up 340 million XRP tokens over the last 2 weeks, a staggering investment valued at roughly $960 million. This whale accumulation suggests smart money is positioning for potential gains. Despite the overall market's broader sell-off trend since July, this sets up a fascinating tug-of-war between institutional optimism and retail caution. Experts remain divided on what lies ahead. Some analysts caution that if XRP slips below the $2.76 support level, it could trigger a swift move down to $2.50, a scenario that might shake weaker hands out of the market. On the other hand, bullish strategists highlight the technical formations and institutional positioning as signs of a major breakout looming. If XRP can surpass the critical $3.30 resistance, targets as ambitious as $4 and beyond come into focus. Breaking down the price action in more detail, XRP opened near $2.79 and closed stronger at $2.82, marking a solid 2% gain within the session. Although the intraday low hit $2.76 around midday GMT, this dip was quickly met with a surge in trading volume, spiking over 180 million tokens traded at once, over twice the daily average of 78 million. This shows that buyers rushed in to defend that level decisively. The price then climbed back to $2.86, establishing that range as a short-term ceiling, which held firm despite attempts to push higher. In the final trading hours, volume intensified again, with over 3 million tokens changing hands per minute, primarily fueling a price rally from $2.83 to $2.86. Such activity strongly points toward institutional participation rather than casual retail speculation. From a technical analysis standpoint, XRP's current setup is fascinating. The support zone around $2.76 to $2.78 has been staunchly defended amidst sturdy volume, while downside buffers lie next at $2.70 and then $2.50 if this initial support falters. Resistance sits firmly at $2.86 in the near term, with notable hurdles at $3 and $3.30 that must be overcome to confirm a meaningful rally. Momentum indicators add another layer of insight. The Relative Strength Index, RSI, is stabilizing around the midpoint, the mid-50s, suggesting a neutral to mildly bullish tone, which means the market isn't overheated but has room to move higher. The MACD histogram is closing in on a bullish crossover, a sign traders watch for as confirmation of fresh buying pressure. Meanwhile, a symmetrical triangle pattern is still intact below $3, characterized by a series of higher lows. This pattern signals that buying pressure is slowly building, creating tension that often results in a breakout once the resistance is breached. So what should traders be laser focused on now? First, will the critical support at $2.76 withstand repeated challenges? If it breaks decisively, the door opens for a drop toward $2.50, upsetting bullish expectations. Second, a sustained close above $2.86, followed by a push past $3 would be a strong green light, heralding upward momentum continuation. Third, keep a watchful eye on whale and ETF-related flows. With October deadlines looming for key spot ETF rulings in the cryptocurrency space, these could serve as powerful catalysts influencing volume and direction. And finally, will the elevated trade-in volumes persist, underpinning the breakout attempt, or will volume shrink back, casting doubt on the strength of the move? Here's the million-dollar question. Are we on the verge of witnessing a breakout that propels XRP beyond $3.30? Or is this just another dead end in a volatile market cycle? Is institutional buying a sign of confidence or a strategic accumulation ahead of broader market shifts? We'd love to hear your take. Do you stand with the bulls eyeing $4 and beyond? Or do you side with the cautious analysts warning of a slip toward $2.50? Drop your thoughts and arguments in the comments below, and let's get the debate started.